Chapter 4, last topic, adjustment of capital. Adjustment of capital. In the adjustment of capital, what we do is we adjust the capital according to the new profit sharing ratio. That the balance carried down, which we write in the partner's capital account, that balance carried down must be in the profit sharing ratio. So for this, we calculate the balance carried down, we calculate the capital, total capital of the firm, and we distribute it in the new profit sharing ratio. See what is written here is adjustment of capital. The partners may decide that the capital shall be in the profit sharing ratio of the partners, the new profit sharing ratio. Adjustment will be required to give effect to it. Partners whose capital falls short or has shortage of capital, required capital may have to be bring. That if, for example, in the new profit sharing ratio, according to the new PSR, the partner's capital should be 1 lakh rupees and the partner's capital is coming to be 90,000, then that partner will bring 10,000 in cash into the firm. And the other case is also right. Shortage of capital can be there and shortage of and excess surplus can be there. The partners may decide that the capital shall be in profit sharing ratio. Adjustment will be required to give effect to it. Partner whose capital falls short or has shortage of the required capital may have to bring more capital, while partner whose capital is in surplus of the required capital may withdraw surplus or excess capital. Right? Shortage or surplus of capital may be adjusted through partner's current account or it can be done in cash. It will be mentioned in the question whether you need to adjust this thing through the partner's current account or through the cash. Now the accounting entries will be accounting entries for shortage of capital. In the case of shortage of capital, that partner will bring cash to the business. So bank or concerned partner's current account to partner's capital account. Partner's capital account we will credit by the amount of shortage. For adjusting surplus of capital, if surplus of capital is coming in the balance carried down of the partner, that when we are totaling the capital and the capital of the partner is in surplus according to the new PSR, in that case that partner's capital account will be debited by that particular amount. This will be more clear through the practical problem. I'm going to the practical problem. Illustrations you will be doing on your own. This is question number. Last two questions are there in the book. Question number 28 and 29 we will be doing today. Question number 29. Suresh, Ramesh, Mahesh and Ganesh were partners in a firm sharing profits in the ratio of 2:2:3:3. On 1st April 2016, their balance sheet was as follows. So balance sheet is given to us. From the above date, partners decide to share future profits equally. So the new PSR is equal. For this purpose, the goodwill of the firm was valued at 90,000. So adjustment of goodwill we will be doing in the sacrificing and the gaining ratio. It was also agreed that claim against workmen compensation reserve will be estimated at 1 lakh and fixed assets will be depreciated by 10%. So claim is coming to be 1 lakh and reserve is given 75,000 in the balance sheet. So 25,000 more claim is there. That 25,000 will be charged from the revaluation account to claim for workmen compensation. Then fixed assets will be depreciated by 10%. Fixed assets are given in the question as 6 lakh. So 6 lakh into 10%, 60,000 will be coming. Two fixed assets, 60,000. Then the next adjustment given to us is the capitals of the partners will be adjusted according to the new profit sharing ratio. So the partners' capital should be in the new profit sharing ratio. They must be adjusted according to the new profit sharing ratio. For this, necessary cash will be brought or paid by the partners as the case may be. right? So first of all, we will be making the revaluation account. In the revaluation account, only two entries are there for us. One is the provision for claim against workmen compensation fund. Workmen compensation reserve is given in the balance sheet as 75,000 and the claim is of 1 lakh. So the extra 25,000 will be charged from the revaluation account. Then depreciation on fixed assets is given as 10%. That also we have charged from the revaluation account. No other item of revaluation account is there. So we will balance it up and 85,000 are coming and loss will be by revaluation account, by loss transferred to partners capital account in the old PSR. Old PSR is 2 is to 2 is to 3 is to 3. So 85,000 into 2 by 10. In the Ramesh account, 85,000 into 2 by 10. In the Mahesh capital account, 85,000 into 3 by 10. In Ganesh account, 85,000 into 3 by 10. So we have made the revaluation account. Now we will go to the working notes to see the adjustment of goodwill. In the working notes, what we have done is we have first calculated the sacrificing and the gaining ratio. Sacrificing ratio, the formula will be old ratio minus new ratio. Old ratio of Suresh is 2 by 10 and new ratio is 1 by 4. Equal ratio is there, new PSR. So sacrificing, so he is gaining. He is gaining by how much? 2 by 40 and Ramesh is also gaining by 2 by 40 and Mahesh is sacrificing by 2 by 40 and Ganesh is also sacrificing by 2 by 40 and goodwill is given to us in the question as 90,000. So gaining partners capital account debited to sacrificing partners capital account in the ratio of gaining and sacrifice. So Suresh capital account debit, Suresh is the gaining partner. Amount will be 90,000 into 2 by 40. Ramesh capital account debit, he is gaining, so he is compensating the other partners. 90,000 into 2 by 40. To the sacrificing partners, to Mahesh capital account 4,500, to Ganesh capital account 4,500. And in what ratio they will be compensating? Suresh will be compensating Mahesh in the ratio of 1 is to 1. And Ramesh will also be compensating Mahesh and Ganesh in the ratio of 1 by 1 is to 1. Right? Because sacrificing and gaining ratio are same. Mahesh and Ganesh 1 is to 1. Same ratio is there and Suresh also same ratio is there. Now going to the partners capital account. What we have done in the partners capital account, first entry, always the first entry will be by balance brought down. That is given in the balance sheet. Suresh has got 1 lakh, Ramesh 1,50,000, Mahesh 2 lakh and Ganesh 2,50,000. This we have done by balance brought down. Then in the revaluation account, loss is there. Loss will be decreasing the capital of the partner. So it will be posted in the debit side. To revaluation account, in bracket you can write loss. 17,000 in the column of Suresh. In the column of Ramesh, 17,000. Mahesh 25,500. Ganesh 25,500. Now the entry for the adjustment of goodwill. In the goodwill entry, what they are doing is credit the accounts of Mahesh and Ganesh and debit the accounts of Suresh and Ramesh. So what we have done is crediting the accounts of Mahesh and Ganesh 4,500. Suresh is giving 2250 and Ramesh is also giving 2250 in the ratio of 1 is to 1. Equal ratio they are giving. That 4,500 is to be given to Mahesh and out of those 4,500, half amount will be given by Suresh and half amount will be given by Ramesh. Same in the case of Ganesh. And then here we will be debiting the accounts of Suresh and Ramesh, the gaining partners, because they are compensating the sacrificing partners in the equal ratio. So this entry we have done till here it is clear. Now we have no other entry in the partners capital account. So what we will be doing is look at the account of Suresh. What in the Suresh account we will be doing is 1 lakh minus 17,000 minus 2250 minus 2250. This will be the balance coming to us of Suresh account. If there will be no adjustment of capital, what we would have done? We would have deducted these three items from 1 lakh. And then what will be the capital of Ramesh? 1,50,000 minus these items. Mahesh 2 lakh plus 2250 plus 2250 minus 25,500. So this way we have adjusted the capital. Adjustment of capital. Look here how we will adjust the capital. 1 lakh minus. So these were the capitals that would have come if we have not done adjustment of capital. So the total combined capital of the new firm is coming to be 6,15,000. But the question is saying that this total capital must be in the new profit sharing ratio. So what we have done is Suresh capital according to the new profit sharing ratio will be total capital of the firm into new PSR 1,53,750. Ramesh will be this. So everyone having the same capital according to the new profit sharing ratio because they have equal profit sharing ratio. Now, so what we will be writing in the two balance carried down will be the same. Two balance carried down in the column of Suresh 1,53,750. In the Ramesh column 1,53,750. So we have written two balance carried down already, but our debit side and credit side is not equal. Why it is not equal? Because we need to bring in cash or we need to pay in cash and we need to balance the account. So how we will be balancing the accounts now? Like we have total Suresh account now again and it is coming to 1,75,250 and the capital here is 1 lakh. So this is 75,250 more amount will be written here in the credit side. Again we will be doing the total and then 25,250 will be written in the column of Ramesh. But here in the column of Mahesh, credit side is more and debit side is less. So what they are doing, they are adding 25,250 in the debit side. This is known as adjustment of capital, that some partners are bringing cash into the business and some are withdrawing cash from the business for making this adjustment of capital for bringing the capital in the new profit sharing ratio. This thing is clear to everyone? How we have done adjustment of capital? Any questions? No? No questions. Okay, clear. Now
मैम
coming to the
69 ठीक है 69 क्वेश्चन जो मैम कह रहे थे आप ठीक है वो
okay Sahil. Okay Sahil. Yes, now coming to the balance sheet, I will be discussing that later words after this question. Now coming to the balance sheet, in the balance sheet, the new balance sheet which we will be making, what we will be doing is fixed assets are given to us in the question as 6 lakh. Out of that 6 lakh, we have deducted the depreciation of 60,000. So it is coming equal to 5 lakh 40,000. And the current assets are given to us in the question as 3 lakh 45,000. Now coming to the capital accounts. The capital accounts which we are doing is this new balances we will be writing. So Suresh capital, Ramesh, Mahesh and Ganesh all are having the same capital because profit sharing ratio is equal. Now claim against workmen compensation fund. This claim we have to pay them in the future to the workers. So 1 lakh we will be writing in the liability side and sundry creditors are given to us in the question as 1,70,000. So we have written the sundry creditors and now we have made the total of the balance sheet and it is coming equal. Clear about this question? Question number 28. Ram, Sohan and Hari were partners in a firm sharing profits in the ratio of 4 is to 3 is to 2 is to 1. On 1st April 2016, their balance sheet was as follows. Balance sheet is given to us. and then the adjustments they have given. This question is not related to adjustment of capital by cash. In this question, we will be using current account because they have written that in the question. So, question is from the above date, the partners decide to share future profits in the ratio of 1 is to 2 is to 3 is to 4. For this purpose, the goodwill of the firm was valued at 1,80,000. So, goodwill adjustment we will be doing. Gaining partners capital account debited to sacrificing partners capital account, right? Then A adjustment given to us is claim for workmen compensation has been estimated at 1,50,000. Claim has come for 1,50,000 and in the balance sheet reserve is of 1,20,000. So reserves are 1,20,000 and claim is coming for 1,50,000. That means 30,000 more claim is coming. So that will be charged from the revaluation account. That is a loss for us. B part is adjust the capitals of the partners according to the new profit sharing ratio by opening partners current account. So we need to adjust the capital in the new PSR and the adjustment which we did in the last question through cash account. In this question, that adjustment will be done through partner's current account because we have in the fixed capital account method, we have current account and capital account both. Now coming to the answer, revaluation account. In the revaluation account, only one item is there, that is of workman compensation claim. Workman compensation claim is given in the reserve is given in the balance sheet as 1,20,000 and claim is coming of 1,50,000. So 30,000 is loss for us. That 30,000 loss we have charged from the revaluation account and no other item of revaluation account is there, so that loss will be distributed in the partners in their old PSR, that is 4 is to 3 is to 2 is to 1. So 30,000 loss has been distributed in the partners in the old profit sharing ratio. Now going to the working note. In the working note, we have calculated the sacrificing and the gaining ratio. Sacrificing and gaining ratio, you know how to calculate the sacrificing and the gaining ratio. So the sacrificing ratio of Ram is 3 by 10, of Mohan 1 by 10, and Sohan is gaining by 1 by 10, and Hari is gaining by 3 by 10. Now, how will they be distributing this? Sohan will compensate. Sohan is the gaining partner. So Sohan will compensate Ram and Mohan in what ratio? In the ratio of 3 is to 1. Their sacrificing ratio. And Hari will compensate Ram and Mohan in the ratio of 3 is to 1. Clear? So how we will be doing the adjustment of capital? Adjustment of goodwill, sorry. Goodwill. So goodwill is given to us in the question is goodwill is given in the question as 1,80,000. So 1,80,000 into 3 by 10 into 1 by 10. So gaining partners capital account debited to sacrificing partners capital account. 1,80,000 into 1 by 10, 1,80,000 into 3 by 10. This way we have made the adjustment of goodwill, right? Now we will go to the partners capital account. In the partners capital account, we will start with the balances. By balance brought down 4,50,000 as given in the balance sheet, right? And then we will enter revaluation account loss. To revaluation account loss amount will be entered over here. And now we will be doing the adjustment of goodwill. Ram and Mohan will be getting this much amount and they will be getting this much amount from Sohan and Hari in the ratio of 3 is to 1. And Mohan will also be getting this goodwill in the ratio of 3 is to 1. And same way Sohan's account and Hari's account will be debited in the ratio of 3 is to 1. This we have done. No other entry of partners capital account is there. Now we will do the adjustment of capital. How we will be doing the adjustment of capital? Ram 4,54,000 credit side minus debit side 12,000. So it is coming to 4,42,000. Mohan's total of credit side minus debit side. So this way we have calculated the balances in the partner's capital account. We will total them and we will get total combined capital of the firm. Capital of the firm, total combined capital. And this combined capital will be distributed, will be calculated in the new profit sharing ratio. So the new profit sharing ratio is 1 is to 2 is to 3 is to 4. So the combined capital into 1 by 10. So Ram's new capital will be 1,27,000. Mohan's balance carried down of capital will be 12,70,000 into 2 by 10. So this way we have calculated the balance carried down, the new balances of capital. That balances of capital we will be writing here to balance carried down. And now the debit side and the credit side is not equal. So that we will be finding out through the balancing figure, and that balancing figure, that adjustment will be done through current account, and we will credit the account of Sohan by 1,55,000 balancing figure that is coming, and we will credit the account of Hari, balancing figure is coming to us as 3,65,000, and we will debit the account of Ram and Mohan by 3,15,000 and 2,05,000. So this way we have done the adjustment of capital. Now going to the balance sheet. In the balance sheet, what we will be doing is, first fixed assets are given to us as 9 lakh in the balance sheet and no adjustment is there. So same 9 lakh is coming here. Then current assets same 5 lakh 20,000. Then current account of Ram and Mohan. Ram and Mohan, because we enter the capital balances also, same way we will enter the current account balances also. In the current account, Ram and Mohan, they have debit balances, so they have been written on the asset side. And Hari and Sohan and Hari have credit balances, so they will be written on the liability side. Capital account, Ram, Mohan, Sohan and Hari, balance carried down we have written. Current account balances we have written. And claim against workmen compensation fund. We need to pay this claim in the future. This claim is 1,50,000, so that will be entered in the liability side. Now we will total both the liability side and the asset side. The total is coming equal. This way we will be doing the adjustment of capital.